Remember that channel that we had in crypto where we were trading in this channel here? Well, yesterday we popped through it up to 38,000, and then by the end of the day, we came back to that channel. Today, we're moving up again. Let's see by the end. I'm curious to see if we come back to this level here. Does this channel hold price intact? Very interesting to watch here. Either way, it's continuing to trade inside of this range, even popping above. But let's see, do we get stall out here, and does it retrace here and continue like that? Very interesting to kind of watch and see what's going on here.
MicroStrategy, led by the crypto maestro Michael Saylor, just turned $4.6 billion into a staggering $5.7 billion. Their bold Bitcoin strategy earned them over $1.1 billion in unrealized gains, making Bitcoin a hopping 80% of their $7.1 billion market cap. Talk about a crypto jackpot. Now let's break it down. MicroStrategy's Bitcoin journey involves a strategic investment of around $4.6 billion, acquiring over 158,000 Bitcoins through funds and bond sales. And guess what? The recent Bitcoin surge, crossing $37,000, only adds more bling to their crypto crown. But hold on, there's drama in the Bitcoin realm. The next BTC halving is the talk of the town, set to slash mining rewards in half. It's like the Olympics of crypto, only happening every 4 years. We're looking at a potential game changer in April 2024, with the reward dropping to 3.125 BTC per block. This halving dance historically triggers Bitcoin price fireworks. And for all the crypto geeks out there, brace yourselves for the April 2024 party. The BTC halving countdown is on, estimated to happen around April 20, 2024. Various tools like MexHash, Bitcoin Census, CoinWars, and Blockshare are placing their bets on different dates. It's like predicting the Oscars of crypto. But while the fuss, well, the BTC halving isn't just a nerdy event, it's a deflationary masterpiece. It cuts the supply of new Bitcoins, making Bitcoin a scarcity-driven superstar. And history has shown that each halving is like a superhero origin story, leading to crazy price hikes and market mayhem. So whether you're on Team MicroStrategy, eagerly waiting for the next BTC halving, or just riding the crypto wave, one thing's for sure. The crypto circus is in town, and it's stealing the spotlight. Let's continue our discussion with Gareth.
We are seeing the markets inching back up just a little bit. Let's take it on over here to the NASDAQ 100 chart. So this is the NASDAQ 100, folks, and what we saw yesterday was pretty astounding. Remember how coming into this week, we had 5 up days plus with a 5% gain on the S&P. Actually, more than that, the NASDAQ actually rising as much as 9% from this low pivot all the way up to here. And what I said to you is, if you look at the data, and I always try to be honest with you guys, it's about the data, right? The probabilities. If you look at the data, the probabilities are that you have a pullback on the S&P up to a 0.8% pullback if you go up 5% in 5 days. Well, yesterday we were down 0.77%. Granted, we did inch up a little bit in the early portion of the week, but we are seeing that pullback. What I think is amazing here is that if you look at the NASDAQ 100, it went right into a key level. Okay, we had this pivot high right here, and that's where for 3 consecutive days, I mean, look at this. This is the daily chart of the QQQ. 1, 2, 3. 3 consecutive days, we hammered on that level. Yesterday was our highest pierce, and it got rejected again. And so as a technician, I say to myself, okay, 3 days in a row of hammering on a level, and it still got rejected. That, to me, is a major level in the near term. Now, we'll see what happens today, right? So today, it looks like the markets are up just a little bit here, going into the open at 9:30. Again, this came on the back of yesterday's heavy sell-off. And let's talk about that sell-off yesterday. So yesterday, what ended up happening, it was a 2-pronged attack on the markets. Number one, there was a treasury auction. And again, these treasury auctions, folks, are actually really important to the market right now, because it gauges the interest of the globe in terms of buying our domestic debt. And so basically, the U.S. government is having to sell about $1.5 trillion in debt over the next couple months, and it needs foreign governments to essentially buy that debt. Okay, and this is where the Fed can lose control, because the Fed ultimately, they try to set interest rates, but if people won't buy our debt at X percent, let's say at 4.5%, which is where rates are right now, what do you think has to happen to interest rates to coax countries to buy our debt? And the answer is, interest rates have to go up if no one will buy our debt. We have to offer essentially a higher interest on that amount of money to lure someone to actually take on that debt or buy that debt from us and give us money for it. So yesterday's Treasury auction, and again, what we can do here, I want to show you this, guys. We're going to flip over to the 10-year yield. If we look at the 10-year yield, this is the daily chart. Now, number one, I gave you guys this support. When we were trading up here, I said this was going to be support. So far, it's been tremendous support. But again, yesterday's price action, what we saw when that Treasury auction hit, and if we flip to the 10-minute chart, look at this move yesterday. And again, I'm going to go back right here. This was when that Treasury auction occurred, right at this point. Look at the size of that move up on the 10-year yield. We went from 4.55% to basically 4.66%. And again, the concept here is very basic. You want money. I want you to buy some of my debt. You say to me, oh, Gareth, you are way over leveraged. I really don't trust that I'm going to get my money back. So to actually give you that loan, I'm going to make you pay higher rates than what you're offering. And essentially, that's what's going on with the Treasury right now. China, Japan, all these other countries are saying, 33.5 trillion, this debt is going sky high. You know, Washington politics are a mess. You guys can't get your house in order. All of these things. And these countries are essentially saying, you know what? We want more interest on this if we're going to take the risk of giving you X amount of money. Okay, so that should explain it pretty simply. Now, again, we are seeing it coming back in today. So rates are coming back in. Yesterday, this move caused a pretty dramatic sell-off in the market. Today, we're rallying back just a little bit as rates are coming in. Essentially now, we're seeing a calming of the fears. Yesterday, again, fear spiked. Today, rates are coming in. That's telling us we're not as concerned as we were as investors about yesterday's kind of crappy Treasury auction. Another thing that occurred yesterday, right around the same time, Jerome Powell came out and said, hey, guys, just to be clear, we may still have to raise interest rates. Now, if we look at this daily chart here of the NASDAQ, in fact, let's even go to the spiders, the S&P 500 here. So what we had seen prior is the Federal Reserve meeting was right down here. Right down here is when the last Fed meeting was. And remember, they essentially came out and said, hey, we're going to probably pause. We're going to wait and see. We're data dependent. They said all the things that coaxed the market to rally higher. Okay? Now, the problem is this, is that Jerome Powell does not really want the markets to rally up substantially. He doesn't mind a small rally, but when you get 1, 2, 3, 4, 5, 6, 7, 8 up days in a row on the S&P for a gain of like 6+%, NASDAQ up 9%, he's not going to be happy with that. Now, you might say, well, why doesn't he want the markets to go up? Well, think about this. If you look, and I talked about this yesterday, if you look at stocks like NVIDIA, right, and we go to the NVIDIA daily chart here, and you see this massive move. From low to high, NVIDIA went 23% to the upside, 23%. Well, that's $1 trillion company. When you go up 23%, if you're just $1 trillion, that's $230 billion. Then you take Apple, right? So again, here we have, let's just do some numbers, right? So $230 billion. Then you look at Apple. Apple went up about 10% on a $3 trillion. That's $300 billion, right? And then you go to Google, then you go to Amazon, and you have another, $150 billion, and so on and so forth. And then you go into the rest. So when you add up all the Magnificent Seven gains, the billion-dollar company gains, it essentially comes out to be like 1.5 trillion with a T dollars that was added into the system in basically a week and a half. And again, that's why, in my opinion, Jerome Powell came out yesterday and actually said something that was hawkish, and it was kind of random. Let's be fair. It wasn't like it was scripted. It wasn't like, hey, guys, at this time, we're gonna make a statement. It was much more random than that. It was kind of at a different press conference, a different speech, where it got interrupted and he let a curse word fly, and it was like, I mean, everyone's just loving that. It's to be honest, it's nice to see the humanity of that he gets annoyed at the same crap that we get annoyed at, right? So, again, that was interesting, but my point is that he has to make this comment yesterday to bring markets in. Otherwise, you're adding way too much money to the system, and it's going to push inflation up. And remember, the Fed doesn't even have inflation under control yet. They haven't brought it under 2%. So you can't be flooding the market with $1.5 trillion in capital gains, essentially, in a very short amount of time, where people are going to go buy more shit. Excuse my language. They're going to go out and they're going to do that, and it's going to increase inflation. It's just the nature of the beast, guys. When you have stock markets going through the roof, it increases inflation because people feel wealthier. They go out and spend more money. If you don't have the supply to meet it, it's going to force prices to the upside.
Standard Chartered's ventures arm, Tissy Ventures, and Japanese conglomerate SBI Holdings are collaborating to establish a digital asset joint venture in the United Arab Emirates, UAE. The joint venture will focus on investing in companies across the digital asset spectrum, including market infrastructure, risk and compliance tools, DeFi, tokenization, consumer payments, and the metaverse, Tissy Ventures described. UBS has reportedly begun offering wealthy clients access to some crypto exchange-traded funds, ETFs, in Hong Kong. Initially, the Swiss financial services giant is offering 3 crypto ETFs that have received regulatory approval from the Securities and Futures Commission. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.